Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting the Asian session live market analysis for this particular week. So we follow the derived forecast and the levels and fine tune using the market trading technique in order to take trading decisions on a daily basis or session-wise basis. So I will first of all explain the derived forecast for the week 30th September to 4th October. And later on, explain to you the market reading for the day and try to find out what could be the possible ways in which the players could make the moves in the market. Then once we identify what are the type of moves they intend to make during the day, we'll be able to do the trading decision or take the trading decision so that we'll be able to find out whether we can do a sell and buy trade or a buy and sell trade and try to keep the hedge order to limit the risk and also try to maximize the profit. So let me give the forecast for this particular week. This week, 30th September and 4th October, up to 4th October, is a week wherein the month of September gets over and the new month starts, October starts. So as we know already, that month end and the new month beginning time, the players are expected to make the monthly trend reversal moves in order to handle the derivative market. So volatile moves are expected to happen or they could prevail during most of the times of this particular week. So we have to be very careful while trading during that of the last day of the month and also the beginning of the month, new month, because the players could make some extreme moves for silly reasons. Now you come across a story that US shut down. So they could just use that as a trigger and try to make up and down moves in the market. So you have to be prepared for that. Every time they will come out with the new concepts or the new terminologies, and those terminologies could provide for a while, and then subsequently everybody will forget about it. So that is the way they try to create uncertainty in the market. Because only when they create uncertainty to that of the traders could go in for the distress trade. And then they might be having the gut feel, but still they will follow the technicals and try to take the positions like the herd of traders. And then subsequently they find that they are being trapped. So this is the normal scenario you come across, but they cannot give the same old stories every time. Then people could get accustomed to that and they may not get deceived. So in order to induce the traders to develop the fear, they have to always talk about the new terminologies or talk about the new economic conditions or the government conditions. So they just elaborate it and give stress for such terminologies, and a lot of people could talk about such terminologies. As a result, you find everybody in the market talks about it without knowing why they are talking about it. And then subsequently, you find that it fades away. So this is not new. Introducing new terminologies in the market is not new to us. Those who have been following my podcast and also my webinars know very well. From time to time, they try to introduce various such titles and elaborately discuss about it. And by the time the people understand, okay, this is what this terminology means, and that will be forgotten. So we have to be prepared for that. Ultimately, it is a month and time. And today, 30th of September. And also coming days, you come across the month beginning time. So they are bound to make some volatile moves in the market. So trade with caution And don't be carried away with that of such new terminologies being introduced, and that too US shutdown. And they are giving various type of explanations. And when US gets shut down with a literal meaning, then US dollar should not have any value. But they try to say that they will try to curb the expenses. So with regard to the essentials and non-essentials. But still, there is an ambiguity how exactly the people are going to consider the essentials from that of the non-essentials. So this is how you find that the ambiguity can be created. So talking so much about it, but it means nothing. And the players can make the moves on their own. Now, as far as today is concerned, they made a quick rise, and especially they made the rise in the case of GBP and opened about 30 to 40 pips, and also opened downward in the case of USDM. But they are expected to make a quick rise and then slowly slide from that level. They also gained the levels nominally after opening slightly lower or with a downward stop, and they started gaining the levels. But still, it is only a 25 pips range in the case of Euro, and then subsequently they are making a small slide now. Then they are expected to make a small slide towards close, and probably about 10 to 15 pips or so. Then again, they are expected to make a swing and quick rise moves during the European session. The session timings are given on the top, so you can follow the session timings from that of the GMT time. So unfortunately, in this live market code page, earlier I was using another live market code page. There again, they created confusions so that I could not use it. Here again, in this live market code page, now they are giving a different time frame. So we will not be able to use that particular time frame. They try to set it to the local time, but still we can open the GMT time frame from that FX rate, where on top it is available, and you can follow the GMT time frame and then track the market. So we have to be smart enough than that of the players, and they try to curb people tracking it. So let us do it. Then, so they are expected to make a quick rise and a slide, then swing and quick rise during European session, and swing and firm up move during that of the US sessions. So these are all the type of moves we are expecting during the month end time. So during the month end time, they are expected to quickly gain the levels in the case of Euro and GBP. Then afterwards, the new month beginning, October 1st, what they are expected to do? They are expected to make the higher level swing and then slide. Then quick drop during the start of the European session and a quick rise, the volatility for the new month. Then small swing and firm up, or they may just make the swings during the US session. So if you come across that during the US session, they are not going to bring in much of an activity in all the 3 days. And they are expected to bring in more activity during that of the Japanese and the European sessions, because the US traders could wait for the outcome from that of the government before making any commitment. So gradually the volume will dwindle. As a result, they will try to make only a small firming up or just make swings or either way swings. That sort of moves could be seen on the first 3 days of this particular week. Then 2nd October, they are expected to make a dip and swing at a lower level. Then from the European session, they are expected to make a swing and rise move, and that could continue during the US session. Then on 3rd, that is Thursday, and you know that ECB is expected to decide on the rate. So we will come across swing and rise move during the Japanese session, and then rise and slide. And during that of the European session, they are expected to make a slide before the ECB decision and the ECB press conference, and then swing and rise during that of the US session. Then on Friday, the non-farm payroll is expected to be announced. So they are expected to make a dip during start of the day and then rise, then swing and rise before that of non-farm payroll, and the non-farm payroll would give a mixed reactions or slightly higher than that of the expectations. So they will make the either way moves, not immediately going to make a drop in the case of Euro and GBP, but instead they will make either way swing, telling that the non-farm payroll is one story and shutdown is another story. That way they will try to give mixed reactions and make either way swings in the market. So you know very well that a week wherein the month gets over and the new month beginning happens, the players are expected to make very big moves in the market on the upside as well as the downside. And that is mainly to handle the derivative market and induce the traders to commit wrongly, and especially with regard to the options market and also the futures market. Then next week, 7th to 11th October, that will be the second week of the month. So swing and quick rise moves are expected. And this month again, the market is expected to show swing and rise moves in the case of Euro and GBP. And alternatively, USD and USD CHF are also expected to gain aggressively. So let us see with regard to the levels, how exactly the market is expected to show the levels or the range in which the market is expected to trade in this particular week. Now, so Euro could form the low, the expected levels are given on top, and the actual levels, so far shown levels, are given at the bottom. So I will try to update the show for, the actual levels as the day proceeds and also till Thursday, and try to show you whether the market has moved in tandem with that of the expected levels or they are just gone differently, so that we will objectively review the estimated levels. So these are all statistically estimated levels with the arithmetic modeling, and as a result, you could come across the actuals may synchronize or may not, but it can breach the low or breach the high, and there are actual standard deviations or small variations you could come across, but these are all nothing but the expected levels in which they are expected to make the swings. So Euro could form the low 1.3475, so far it has formed at 1.3478 and it's not been breached. And the high 1.3850 area, it could quickly gain the levels, and 1.3503 was the level, and then they have gone slightly above 1.3506 as a high. Then in the case of GBP, 1.6100 could be the low, and so far we have seen 1.6140, and high is 1.6575, 1.6182, they have shown it as a high. And as I have been explaining in the previous weeks, that USDN is expected to make a downward move as a trigger to the market for Euro and GBP to go up. So, last week it was trading around 98, 99 and suddenly made the drop, and now you come across it has come to that of 97 area. So, when it has come to 97 area, don't jump and buy, because you know very well, before making a big rise, in the last week, they just come to below 98 and quickly reversed to 99. Then came below of 99 and came up to 98.23 and then reversed. So they created the feel that way that, okay, when it comes to around 98 or below 98, one could buy. But, the players are more clever than the ordinary traders. So what they do is they hold below 97 and for a day or two and try to make a downward stop and before making a rise. So traders could buy here and later on they could make the downward stop and then later on rise. So what could be the estimated level? They could go up to 97.25 So far they have shown 97.69. When they make a quick downward stop, and then you try to take a buy, and especially they are expected to do it during start of the Japanese session, that sort of downward move. So watch for such moves and try to take, or keep a limit order and try to take a buy, and also keep the hedge order to limit the risk below 97. Then they could gain again to 99.75 by end of the week, and during the non-farm payroll, in order to give a different move to that of the market. At that time, Euro and GBP, they could make a drop and then rise again. But next week onwards, they are expected to make swing and rise moves in the case of Euro and GBP, along with that of USDN and USDCH. Then in the case of USDCH, it has come below that of 91 and come closer to in trading in the area of 90, and 90.25 could be the low, and 90.46 they have shown as a low, and they are accumulating, making small dips and accumulating small dip and accumulating all the sells. And now people might think that it will go to 0.8988 area and things like that as Euro and GBP are gaining the levels, and suddenly they will just give a breakout news and reverse in a very big way USDCH. And so don't go for a sell and buy trade at all. In the case of USDCH, buy during such drops and near the low, and try to keep the hedge order to limit the risk and don't become bearish. And they are expected to make a quick rise. In the case of USDCH, similar to that of USDN, they are trying to do it. And the high could be 94.50 and so far 90.68 they are shown. Then in the case of Canadian dollar, it has been doing range bound moves, and 1.0300 could be the low, and they are shown 1.0301 as the actual level, and it could gain the levels during the week 1.0625, and all denominator currencies are expected to gain the levels during this time in order to handle all the crosses. So you know that during first week they make differential moves from the rest of the weeks. So in order to handle the majors as well as the crosses, they make very frequent contrarian moves. As you look into it, you will be able to understand how contrarian moves they are doing it. Euro negative net change, USDN negative net change is a contrarian move. Euro negative net change and GBP positive net change, it is a contrarian move. Because of that, Euro GBP has come to 83 level. So this is how they handle the market. So we have to understand that. It's nothing to do with the economic conditions of Europe, economic conditions of UK. Then Euro negative net change and USDCH negative net change, they are making a downward stop in the case of USDCH before making a big rise. So by look of the majors, you'll be able to say what could be the conditions in the case of crosses. Then Canadian dollar negative net change, now it has become unchanged, and Australian dollar negative net change, that is again a contrarian move in order to handle the commodity process. So now USD CAD is making consolidation here slowly. They are expected to gain the levels to 1.06 area. Then Australian dollar last week they have been holding strong around 93 area, and today they have made the drop 92.81 as the low, and they could slowly gain the levels, and 93.23 is the shown actual level, but they could gain up to 96. Last time they went up to 95.22 and slightly above there for about 75 to 80 pips. They could gain the levels and again make the drop. It will be making only wide range swings. So keep that in mind, and instead of taking positions in Australian dollar, I recommend that people to take Euro GBP and USD the positions. You will be able to quickly close the positions with profit and re-enter into the market. Simply holding the position for a prolonged period without any advantage is not a wise trading strategy. Now coming to that of the market trading. So I have given the forecast and also the levels at which the market is expected to behave. So this is the forecast sheet. The expected market moves for the Japanese, European and US sessions for all the 5 days of this particular week. Then also the range in which the currencies could trade in this particular week, 30th September to 4th October. Then coming to the today's market reading. So here you come across the initial lows and the highs which are taken around 3:30 GMT, and we note down the initial lows and the highs around 3:30 GMT on a daily basis and try to find out where exactly they are taking up the market, or on the upside or on the downside, by making a reference to the previous day initial lows and the highs. So Euro formed 1.3478 and 1.3501 as a high, and 1.3506 they formed as a new high, and now they are coming below that of the initial high. So slow slide is happening. Then in the case of GBP, 1.6140 is the low, 1.6182 is the high. It is just making a range bound swing within the low and the high, and still the spread is very narrow between the low and the high. So we have to wait for the breakout, either below that of the low or above that of the high, to initiate trading. Then in the case of yen, 97.69 was the initial low and 97.93 was the initial high. They breached and formed 98.06 and holding above that of 97.93. So they are expected to hold it for about 2 hours and make still upward stop during the start of the European session, and then start making the slide again during the US session. So they will induce the traders to take a buy, show only about 10 to 15 pips rise. So the traders will think that let it go to 99, they will book profit, then they will show again 97. So this is a deceiving strategy they try to use it. Then USD CHL 0.9046 is the low, they are not breached, and 90.68 is the high, that is also not breached. So subdued moves are happening within the range. They are trying to make the moves, a contrarian move in the case of Euro and CH. Then Canadian dollar 1.0303 was the initial low, and they breached and formed 1.0301. A brief downward happened before making a rise. 1.0306 they have shown, and 1.0319 is the high, and they are expected to breach it. But again, it is a very narrow swing they come across. They could make a downward stopping followed by upward stopping and try to consolidate and slowly gain the levels whenever the trigger happens in the market. They are focusing mainly on the majors. Then Australian dollar is a month end, so they just handle the majors and also the process and take lesser importance or give lesser importance to the other commodity pairs and their crosses. Then Australian dollar, wherever the volume is less, they just ignore it. Wherever the volume is more, they try to make quick moves and earn more and consolidate their income as much as possible for the month end. Then Australian dollar 0.9281 is the low, they are not breached it, and 93.23 is the high, that is also not breached. So you find that the narrow range swings are happening here, but slowly you find improved moves in the case of the majors. So at the moment they are doing only the contrarian moves. So the time is about 5:24 GMT. So slowly they are expected to make a small dip in the case of Euro and GBP during late Japanese session and start of the European session, and then start gaining the levels. At that time, when they come closer to the level low or about 5-10 pips above that, you can try to take a buy and keep the hedge orders 30 pips below and try to watch how the going is. And once the position makes profit, you try to keep, once the position makes a 25 pips profit, keep stop at entry and remove the hedge order so that you don't incur any risk. And later on, try to do exit of the position by keeping 45 pips limit or 75 pips limit. And once the going is good, you can just move the limit away from the market and use the trailing stop to tighten the trade, so that if they hit your trailing stop, the minimal profit will be uh, earned, and if they hit your limit, then the maximum profit would be earned. That way you can just maximize the profit using a trailing stop on the downside of the market and using a trailing limit on the upside of the market. You can do it manually, or some platforms offer this trailing stop, and then make use of it. And some of the brokers, what they do is, when you use trailing stop and they try to hold the position, simply fill it. So be careful, and you have to see the behavior of the platform provider, and then accordingly make it as either manual or automatic trailing stop. Now, if you want to become a successful trader and also need to understand how the players are making the moves in the market, so we need to know the session timings elaborately. And so the session timings are to be followed in GMT time frame. And if you are used to that, then probably you will find market reading becomes much easier. If you do not follow the market with a GMT time, then you might find it difficult to understand. If you try to bring the market to your local time, that means the international market, you are trying to bring it to your local time and trying to understand. But we should not do it that way. But we have to go to the international concept and try to understand how in various countries people could react to that of the market during different time frames of the day. It is a 24 hours market. So we have to find out the three major sessions timings. And also in between, we come across the gap time. And these gap times, the bank orders do not come in, especially with regard to the currency conversion trades of the exporters and the importers. Then in the absence of such things, then the players make the stop picks or the false moves during those gap times. So here there is a gap time between Japanese and the European, 7 to 7:30. Then the gap time between European and the US session, and a gap time between the US and the next day Japanese session. So understand the timings. Then each session, the early, mid and the late session. The early and the late sessions, they handle the majors, and mid session they handle the crosses. Each session they try to do it that way. So immediately don't think that when they start rising euro, they will continuously rise euro during the day or continuously rise GBP during the day, because they have to handle all other pairs also correspondingly. That is why they make a quick rise in the case of euro or GBP. Then later on they make the swings during mid sessions, and then if they want to rise, they rise during late session or drop during late session, depending upon the data trigger or depending upon the trader's pending positions. They try to make the moves in the market. So ultimately, we need to understand, and early and the late sessions, they handle the majors. So during the mid session, we should not try to take the positions in the majors. That means your holding time of the position will be prolonged, because the mid sessions are of a longer duration when compared to the early and the late sessions. So it may test your patience once you take a position and simply wait during that of the mid session before closing the position during late session. And if you understand the timings, then you will simply ignore the mid session timing or the moves when you try to take the position near the low, a buy position in the case of euro or GBP near the low, and keep the hedge order, and you are able to keep stop at entry by mid session. Then calmly wait, sure that they are going to make further rise in the case of euro and GBP during late session, and towards close of the late session try to book profit. Then again wait for the gap time move. Gap time moves, they always make a false move. If they want to make a dip during the early session, they will gain the levels during the gap time. Then if they want to rise during the early session, then they will make a dip during the gap time. That will indicate what sort of moves they are doing it. And there are some traders who follow me and try to do the gap time trades also. During such small drop, they buy and book profit, or if they rise, they take a sell position and book profit during the initial dip of the early session. Then again, they buy and try to do the swing trade during the session. So that way, if you try to restrict your trades within the sessions, you'll find consistent earning habits. And also keep in mind that they need to make a spread between the initial low and the high for more than 40 pips in order to handle the currency effectively. If the spread is less than 40 pips, if you try to commit a position, you may not come across aggressive moves happening there in order to book some nominal profit. So you try to find out. Australian dollar is made more than 40, and here Japanese yen has made, GBP has made 40 pips in the power, but Euro has not made, CHF has not made, then Canadian dollar has not made more than 40 pips. So they are handling at a given time only two currencies. So they handled initially during the Japanese session, the Japanese yen and GBP, making a quick downward and a quick upward move, holding Euro in order to handle Euro GBP. Later on, they also bring in the moves in the case of Australian dollar because Australia is active during this particular time frame. So if there is any doubt, you can ask me the questions. I am willing to answer those questions. In the chat window, you can ask me. Okay. If there is no doubt, then I'll try to wind up the webinar. Okay. Great. Gold for October. You'll come across slow gains in the case of gold, silver during this particular month, and one can do buy and sell trades in the case of gold and silver. And by year end, we'll come across some good gains happening in the case of the commodities, gold and silver, especially the metals. Any other questions? Okay. Do you foresee further dollar weakness during last? Yes. The last quarter, the dollar is expected to weaken further, and they are expected to consistently gain the levels in the case of Euro GBP. But as far as the denominator currencies are concerned, like USDN, USD CHF, and Canadian dollar, against them, the dollar is expected to strengthen. And with regard to the regional currencies, the dollar is expected to weaken because they had done the multi-year trend reversal in the case of regional currencies like Indian rupee, the Mexican peso, and the Korean won, etc. And now they will make the strengthening move of the regional currencies. So rupee is expected to gain more in coming days. And they will not make a slide straight away. They will try to just drop 1 rupee at a given time and try to consolidate and things like that, like the pip moves in the case of the majors. Then later on, when the traders think that, okay, any further drop is a good averaging point, then they will try to average. And one big drop, then it will lead to over trading and everybody will start liquidating the long positions. Then check here. What direction of Euro GBP? Euro GBP already they started making that drop, but after the drop, don't sell and let them come to about 83.80, 83.90 level and then take sell positions. Then it will make for the drop to 83 area. And slowly it will come to 82 as I explained that the ultimate bottom we could see is 76, 0.76, but it will take a longer time. For that they have to gain very big in the case of GBP. That's what I have been telling, and many people were just thinking that GBP is appearing very weak when compared to that of Euro. Now you find that GBP is making stronger moves. So this is how you know that GBP is the currency they use to create the market sentiment. So when they gain more levels in the case of GBP and less in the case of Euro, automatically Euro GB will come down. Because when Euro GB was around 0.8750 level, I was telling that it is expected to make a big growth. Because I believe that is the way the forecast has to be done. Not ambiguity, it can go to 0.88 or 89, or it can come down to 0.86. And either way, if you give, and ultimately, it does not help the traders. In Aditya, then Frank, Euro Yen outlook for next week. Okay, Euro Yen, as you come across, Euro is in the negative net change, Yen is in the negative net change, Euro Yen is also in the negative net change. Accumulative of the pips drop you come across here, and it will be trading in the range of 130 to 135. Then Frank, okay. Mike, a pair should have more than 40 pips spread prior to entering a trade. Yes, right. And if the spread is very less, if you try to take a buy, even though it is closer to the low, and you may wait for 2 sessions in order to book about 30 pips profit. Whereas in the case of where the currency has made already 40 pips, you try to take a position, you should be able to book 30 to 40 pips profit within the session, which is better. So we have to first of all identify which currency we have to enter so that quickly we earn money. So no sentimental attachment to any currency pair. They are all tradable, and we have to find out which one could give quick money. And in the process, what happens? People fail to differentiate the majors from that of the crosses. Then immediately they think that the crosses give more profit. So here they come across the spread is more. But not 40 pips. The spread should be 70 pips and above in the case of crosses. Only then you can enter. Otherwise, you will not make good profit immediately. So when they see the spread is more, immediately they try to take a buy or a sell. But in the case of crosses, they make one-sided moves for at least 2-3 days. So we have to be very careful. If you're on the wrong side, then you may have to hold for 2-3 days in order to book profit. So there comes the risk with regard to the crosses. Whereas in the case of Euro and GBP, if you simply take a buy at 1.35 or a sell at 1.34, if you simply wait, you will be able to exit out of the position with lesser loss or with a profit. But in the case of the crosses, they make big moves on either side, and your margin may not be in a position to protect it. So in the event, normally what the traders do is suppose they are taken 1.34 or 33 SL position. When it comes to a quick rise to 1.35 or 36, they add another sell and close both the sells below the average. If they trade without a stop. And so people use various strategies. Such strategies will work. The normal, the herd of traders use the normal strategies like averaging. And such strategies will work in the case of Euro and GBP, but not in other currencies. You should be able to differentiate it. These indicators work for the day trading. And you know that if you listen to the people who talk about the technicals in the webinars and also explain it in different forums, you find that people normally call it as a lagging indicators. So, in order to make a comment with regard to any currency pair, we can use such indicators. But if you want to foresee what is going to be the type of move, what indications you come across now from that of the technical analyst. See, I was also a technical analyst earlier, strongly preaching it. Later on found that there are a lot of limitations. And So I'm not against technical analysis, but it is a question of the market is being manipulated. So such technical analysis appear working and suddenly reverse. That is the biggest problem. So any sort of indicators we try to use it, unless and otherwise you try to find out what sort of moves they intend to make, then only it will act as a forecast. See, I can give a lot of comments about what happened yesterday, what has happened around 1 GMT or 2 GMT or during start of the day, gap opening, etc. But ultimately, what is more important? Can I buy GBP here? Will it go up? Or can I sell GBP here? Will it come down? That's what the traders require. In Grim. What currency to pick for wealth keeping? Now, for wealth keeping, invariably you have to pick up the weakest currency. And once it becomes very strong, and try to exit out of that. So, from that of the stronger currency, you have to go to that of the weaker currency. But still, the reversal has not happened with regard to the gains in the case of Euro and GBP. And so, you can just wait for further rise in the case of Euro and GBP and later on exit and go to that of US dollar. Then US dollar will strengthen and come back to that of Euro and GBP. That way you can continue to circulate. You will find your wealth will multiply. Always keep in mind, whenever you want to convert from one currency to another currency, that convert from that of the strong currency to the weaker currency or the weakest currency. Then when the weakest currency becomes stronger, you earn quite a lot of money. But normally the human tendency will be, when the currency becomes weak, then immediately they will give a lot of attributes. Now US shut down when US dollar has become weak. So you hesitate coming to that. That is a normal condition. But they have to create euphoria of that nature. Only then the people can do distressed trades and the richest can become further richer. Then deadly. What can we expect in the New Zealand dollar yen today? So I am not tracking that particular cross-mix entries. What will be the first sign that they create a bullish sentiment and traders only make buy positions? Okay, normally during the shift in trading zone, they do the lower level consolidation. You know, when Euro was around 1.25 and things like that, how frequently they have been making downward stop. Then later on, they come to the middle level consolidation. In this, they make either way stop-ins. On Friday, it went up to 35.67 and then now it is for 34.78. Either way, they make the stop-ins. Then, once they reach the highest level, they will make frequently upward stop-ins. When they make quick upward stop-ins, understand that they are quickly gaining the levels and exiting out of their positions before making a big drop. And you know, when Euro was around 1.60, I was telling sell. Everybody was telling that I am telling something wrong. When the entire world was looking bullish for the Euro and GBP. But always keep in mind the quick moves and false moves in the market. They quickly make such moves in order to change the market sentiment. Then, so during the higher level consolidation with the upward trend, people will continue to buy during dips. Then, players make further drop and induce long liquidation. If they try to average, they make further drop. If they try to average, they make further drop. Ultimately, long liquidation comes during month ends. Then Mike, will US government shut down affect sentiment? See, these are all the hypes. That's what I can tell you. And in the financial market, people can talk so many things, but in the actual conditions, things might differ, and no government is transparent in giving what are the strategies they are going to use and how exactly they are going to handle situations, etc. Because it is a highly secret conditions. So people can talk based on some clues. So simply say that the Fed chairman is dovish or hawkish and things like that, and try to give various interpretations. And they are all nothing but interpretations. And they just do that in order to create the sentiments as the mouthpiece of the players. And later on, the players, once the strong sentiment is created, and once the traders commit positions, they simply reverse the market, talking about a new topic. So all along they are talking about now from today onwards that shutdown. So later on they will say that something with regard to ECB or something with regard to GBB or BOE and things like that, and try to reverse the market. I think I have taken more time, so I'll try to wind up the webinar. So I take this opportunity to thank FX Trade and also you people who have come here to listen to my webinar. And my webinar recording will be available in this blog, fxtrade.net. I'll give the link, and also it will be available in fxtrade.com. And if you want to contact me, you can contact me through email address, dr@inoindustries.com, in case you like to know some forecast or some of the trading strategy or how to handle the unfavorable positions in the market. I am willing to help you. Thank you one and all. I'll see you on Thursday. On 3rd October, I'll come back and try to give the review of what we have done it as a forecast. So this is the forecast slide, and let us see whether the forecast come true or not objectively. Thank you one and all. See you on Thursday. Wish you all happy trade.